What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is April 8th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about none other than what I call the Bitcoin storm. We have been in a month of consolidation to the side, and we've seen that Bitcoin has been chopping alongside its typical bull market support band of the 21-day pocket. So I want to spend some time here to talk about this uncertainty, talk about the micro and macro events that we need to keep on our radar, and give you an overall strategy at the end of the day that you can utilize in order to make sure you not only preserve and protect your capital if things start to go south, but also how you can maximize gains in the event that we move to the upside. We got a lot to unpack here in today's video, so if you happen to enjoy, consider dropping a like, and let's go ahead and kick things off. Now, as always, I like to clarify here, guys, that when markets are chopping like this, while it might sound like a redundant statement, we need to prepare for both outcomes. Me sitting here and trying to be a Nostradamus or tell you essentially which direction it's going to go, look, there can be some value in that and trying to give you my opinion, and you can take my opinion and many others, with a grain of salt, use it for your own analysis, and place your bets, right? At the end of the day, you're going to have to do that to some degree. But I think that when we're in a consolidation phase like this, at least from a trader's perspective, I'm not looking to make much excessive bets here and simply sitting here and saying, oh, I'm just going to hold through and wish for the best, or no, I'm only going to sit in cash and I really think that there is a due correction and I'm only going to wait until Bitcoin goes to this moving average. Both of those can leave you getting wrecked big time, because we want to make sure that we don't miss out on any opportunities if the signs of momentum are there, but at the same time, if we are going towards certain ranges that would indicate we're heading towards much lower prices and need a healthy correction, as we sometimes see during halving events, then in that case, we got to be prepared. Make sure we close out of our positions, get in at lower prices at those moving averages if the right signs indicate that. However, I want to go ahead and just indicate here above all that price action right now is showcasing that the market is in that decision phase. It is in the Bitcoin storm, which we've talked about and we've been through before. And the big reason for that is obviously one of the major micro events that's going on. When I say micro, I'm talking about events within the crypto space particularly, not the macro sphere. In this case, we've got the halving event going on. Now, it depends on which countdown you're looking at here, but generally speaking, most of the countdowns are pointing to somewhere around April 18th. Generally speaking, around 10 days from where we are now at the time of recording. It's incredible to think we're here. I've been here through the prior halving event back in 2020. I remember hearing about the prior event as well in 2016. And overall, it's a really exciting event for crypto, irrespective of where you think markets are going, because this really only comes around every 4 years. And it does have a major supply adjustment on Bitcoin's overall minting of new Bitcoin every single day within the blocks. Essentially, we're going to be dropping from around 900 Bitcoin a day down to 450. And that's definitely, considering Bitcoin's market cap, a pretty significant change in overall, dollar Bitcoin that is hitting potentially the spot market every day for miners to cover their expenses. However, at the same time, we've echoed here before on this channel that this halving event has a weaker effect than the prior halving event, as is with the prior halving event. Essentially speaking, halving events become weaker and weaker and weaker over time, because you're essentially having a much smaller net effect on the halving event, right? You can be bullish on the halving event. I'm not here to say that it's not a good thing. It absolutely is. But the thing is whether or not this is going to be able to support price extensively over the next year or two. Because at the end of the day, we're talking about going from an inflation rate of 1.4% to essentially 0.7%. Right? If we take a look back at prior halving events, we were going from inflation rates that were going from double digits to single digits. So essentially, you're talking about a net reduction in inflation versus the overall supply of much higher amounts versus what we're going to be experiencing in this halving event. I know that this is obviously getting people really excited, and it is something to consider here. But what I think you're going to also need as one of the dynamics to consider is the overall ETF inflows. Right, these two things are really the key dynamics that are going to determine where Bitcoin's price goes over the next couple of months. And if we take a look at the ETF inflows, we had this great expansion, right? We really flipped our tune. Like back here in week 4, week 5 of the ETF, we made it very clear that, guys, the ETF inflows are looking good. Bitcoin can keep going for a while. Altcoins, it's time to start placing some bets, making some money on it. And we made some phenomenal trades, some great returns. We came back swinging in Q1 of 2024, right? We really captured on the meme coin trend. We made some strong calls here as well for other strong narratives like DPIN and Bitcoin infrastructure. So don't take me as being ultra bearish here. We made some great returns over the past couple months. We've been generally long on the market. However, there is something to be noted here, which is that for all of those weeks, we had double-digit increases in the amount, double-digit thousand increases in Bitcoin's accumulated Bitcoin within the ETF products, right? And that's even including GBTC outflows, which you do need to consider in the equation. We want to see generally how much new Bitcoin is being parked away within these financial ETP products. And we saw that, of course, as GBT selling had picked up, that number has remained relatively flat since back on week 10. However, while we have ticked up to new highs here technically, the important thing I want to signify here is that we've got to get back into that rhythm of the 10 to 30K BTC additions every single week if we really want to clear through those all-time highs. And the reason I say that here is because it is going to become more and more in demand here, more of a demand in order to have that continued risk on appetite, for prices to continue expanding at this point from prior all-time highs. You are going to need massive amounts of institutional inflows, as people have preached is coming, right? So we have to see whether or not that's going to play out here. I want to get back in that pattern where we're getting, at least 15, 20K BTC weeks on a normal basis, with the exception of the ones we had like on week 7 on a rare occasion. Most of the weeks need to be in similar volumes of BTC. And if we don't start seeing that, well, the halving event is great. The halving event is a fraction of the impact here of the ETF inflows. It is much more of a question of whether or not there is the demand for new BTC through the ETF products versus a supply contraction from the halving event. The halving event is a much smaller event in the grand scheme of things versus what the ETF can do for Bitcoin, right? I really want to emphasize that, guys. It's very important to understand that the demand question is the biggest question we have on our minds here, right? So I want to make clear here that for me personally, seeing those tens of thousands of Bitcoin being purchased on a weekly basis through the ETF would be a huge cue that we are ready for a broader upward move, that we're ready for 6 figures, that Bitcoin is really going to charter a new bull market beyond its prior all-time highs. If we aren't seeing that, if we're seeing more single-digit thousand weeks, sometimes weeks where grayscale outflows are still quite heavy and potentially knocking us down where we're having negative or neutral weeks, that is going to be for me a sign that at a minimum, we are due for a correction down to the 100-day moving average or potentially 200-day moving average, which I know to many people sounds impossible, but it could very well happen in the sense that we just generally face a slow chop down here where the price level's probably no further than 50K, somewhere in that ballpark, but could be pretty brutal for a lot of altcoins. So just keep that in mind. Now, I want to spend some time to talk a little bit about a game plan, about how you can approach protecting and preserving your capital, but also making sure that you don't miss out on any nice solid gains going forward. So the key 2 levels that I'm watching for here are right under around 60K, around 59 to 59.5K, and also here around 75K. I think these ranges here give you some very good ballpark figures to let you know whether or not the trend is really decaying and potentially going down to longer term moving averages, where you'll probably be able to scoop up altcoins, particularly at a really great discount. And outside of that as well, a point in which will let us know if we get above this range and get a daily and not to mention a weekly close or a monthly close, you're going to have your cue for a continued bull run. So that's essentially what these 2 levels are. I think if you get above $75,000, and the more confirmations you have, like a daily close, a weekly close, a monthly close, those are all going to be the cues for me, especially if they're aligning with tens of thousands of BTC being purchased every week. That's going to give me the cue that we're going to 6 figures, right? That's where a lot of the crazy altcoin gains are going to be made. Speculation and risk taking are going to be amplified to a large extent, and that's where we can really make some phenomenal returns. If, on the other hand, we are coming down here towards around $59,000, which, yes, I understand is quite a margin from where we are right now, I would say that that's kind of your safe bet here, that we're probably going to be coming into the 200-day pocket, potentially making the prior ETF highs of around $47,500 to around $50,000 on the wick, or 49K. I think that range could start to become support for a longer continued move back towards the previous all-time highs, maybe even going higher. We'll see how that plays out. That's quite far away, even if that's the case that plays out. But the key point here I'm echoing is that this will at least minimize a lot of the damage and downside. Now, if you're talking particularly about being exposed to Bitcoin, right? If you're a long-term hodler in this case, and especially if you're in a tax jurisdiction like the United States, then I wouldn't be probably, just trying to sell and buy at a discount. I would only do that for altcoins, because in that case, you can really get a marginal difference from that point of like, in this case, 35, 40, even 50% on some names, right? You're going to see some pretty extensive corrections once we get into that 200-day pocket, where altcoins, it can be much more favorable to position yourself in there at a nice discount for a continued move, or at least give you better risk-adjusted entries. On the other hand, if you're like getting prices up here to around 75K, at least, even though you're paying a premium, you know that there's that momentum there, and there's a very good chance that it's going to continue and really get towards that next leg up, where a lot of these altcoins can easily still 3, 5, 10, 15, 20x from this point on. So that's the kind of way I would play it here. I would not try to trade this range here. I would not try to take any extensive bets for trading within it or betting on the upside or downside from where you're already positioned. And make sure you have this kind of framework that can really help you to navigate these environments, to make sure you lock in profits, for extensive held long-term positions that you've held for a long time. But at the same time, you have something that will give you the cue that, hey, you can really start to expose a lot more capital and ride the wave. When I just take a look at others' dominance and others' market cap here, because as you all know, my focus here is on the altcoin cycle, potential altcoin cycle that could play out where altcoins really leap forward to new valuations. We've made some pretty good leaps and bounds here. We're back where we were back during 2021. Now, you all might remember from one of our videos before, we talked about the fact that M2, global liquidity, is hovering around where it was back in 2021. So it makes sense to an extent that we are up here right now. But the question we need to ask ourselves is whether or not global M2 is going to continue expanding, because for the last 4 or 5 months, it hasn't. It's been flat. And altcoins are extensively dependent on liquidity and liquidity expansion. It's the only reason we saw altcoins go from around a $13 billion market cap in the others category to $450 billion during the last cycle. And we've already leapt up from around $75 billion to $324 billion. So we are going to need that additional surge of money, most likely. Or the ETF inflows have got to be really solid so that Bitcoin's valuation can expand and, of course, have a trickle-down effect where that liquidity starts to flow into the others, the different types of plays in the altcoin market, right? But the big thing here I want you guys to, again, just keep in mind is watch others' dominance here. This is going to be one of your biggest gauges here. We unfortunately had one of our worst weeks here since back in January. We were not able, after multiple weeks, to be able to break out to a new close above the prior December highs. And essentially, there's still that stagnation in others' dominance. So right now, what I recommend doing is not only looking for those key price levels we talked about for the next major leg up, right? Getting above 75K, making sure that we break out of that wedge pattern on Bitcoin, right, to the upside, get a daily or weekly close above this range. That's my cue. And in the meantime, what I recommend doing is focusing on what potential plays could be the next new narratives that could do those 5, 10x moves, that could really go on to become really sizable players that fix real issues in the crypto space. And one of the key topics and narratives that I'm really honing in on, and I think is going to be a huge topic going into a broader altcoin cycle, are platforms that are solving for the constant amounts of scams or exploits in the crypto space, predominantly the use of rug pulls that essentially have stolen over $760 million as of last year alone from crypto investors. And I would beg to say that that number is going to be even higher this year in 2024, as there's a bigger array of meme coins and emerging narratives where projects are popping up overnight. There's little details around the teams and the fundamentals. That's why I want to spend some time to talk about our long-term partner in this channel, AngelBlock, who essentially is building the leading platform for fundraising in Web3 with the standards we should come to expect in an industry like crypto. Essentially speaking, AngelBlock has built a platform that implements a sort of tranche release mechanism of funding known as milestones, where the actual investors, through the governance process in AngelBlock, not only have all of the details they need in order to participate in transparent funding. So I'm talking about transparent vesting schedules that are verifiable on chain around when the team or other investors are going to be getting tokens, so you have a real transparency around the token economics of a project. But beyond that as well, being able to have all the necessary details that you would expect through a fundraising or launchpad portal on the said project. And beyond all of that, even if you do decide to participate alongside other investors in an investing commitment round to some kind of idea that might be novel and exciting, the team doesn't just get all that money right away. They have to deliver on key milestones that essentially showcase that they're here to stay, that they're trying their best, and they're actually trying to deliver on their vision, which essentially can prevent the vast majority, if not all, rug pulls in the crypto space. So I really think that this is exciting. It kind of disincentivizes a lot of the scammers. It attracts a lot of the quality projects that are doing things by the books and are really trying to build something lasting and long term. A great example of this is the recent launch of Script Network, where on the platform, AngelBlock raised a couple $1,000s for this new emerging project, Script Network. And the really cool thing about it is that it's performed extensively well since its launch. And as of the time of recording, those who invested through the AngelBlock platform are up nearly 5x from their initial investment just back a few months ago. So this is really exciting stuff here. And we can see live on the platform what milestones the project needs to clear through in order to get releases of additional funding for the round. So we need to see that the platform needs to hit a certain amount of content watch time on its platform, as well as adding a certain range of channels, as well as the content governance on the platform. So very clearly defined and easily attainable features that at least signify here that the project is aiming to deliver on something real and is not just a pipe dream or a false set of promises. This is the kind of filtering mechanisms that will greatly improve the quality of raises in the crypto space, and it's a big reason why I believe that Thol, or the AngelBlock token, is going to be very valuable in the long term personally. I'm not saying that here just because we're partners on the channel. I genuinely believe in the vision that Alex is delivering on. And with their recent listing on Bitmart back in early April, alongside their MEXC listing and their liquidity on Uniswap, there's a ton of different areas where you can trade the Thol token. But I recommend above all that you guys do your own due diligence, check out the platform, learn about how the Thol token is integrated within the AngelBlock platform to get increased ability to invest in these early stage projects, as well as staking rewards and a whole range of other benefits. But I think above all, it's one to keep on your guys' radar as one of the emerging narratives, as it really is in a league of its own when it comes to this fundraising narrative in the crypto space. There aren't many like it out there. In a sea of other launch pads and project platforms, I simply don't know of any that are in the same league as AngelBlock. So now that we've spent some time talking about what's going on in crypto markets, the things that we're watching for when it comes to Bitcoin's price, altcoin dominance, you name it, the key thing I want to go ahead and talk about here is the macro analysis. I feel there are a lot of people who, usually like myself would probably be tracking the macro markets that are going a bit silent on the macro right now because they're so focused on what's going on in crypto. And to be fair, we can only put so much of our attention towards any given set of topics. But as you all know here, one of the things that I've emphasized is maintaining a balance between focusing on the microsphere, tapping into those opportunities in crypto. We know about which narratives are likely going to succeed and how to position ourselves for an altcoin cycle in the event that it plays out in a continued bull market. But I want to emphasize here that the macro is also very important. For over a month now, it doesn't matter if you're looking at the NASDAQ, the S&P 500, we have generally seen a relatively neutral trend and a breakaway from the expansion we've had since back in October. A clear halt in the trend here where we're facing a lot more chop and have not set in new highs here for the indices since back here in March, around March 21st for most of the stock market. So I think that this is significant not only in the event that this is signaling that we may be seeing a correction, a due correction in equity values, probably to some longer term moving averages, but beyond that as well, it's not just equities that are showing this or the broad indices, it's also individual market leaders like NVIDIA. Now, NVIDIA, since the kind of rally it's had back here, has expanded around 800%. It's essentially up 9x from where we are here today, guys. Think about that, right? This thing has made massive multiple expansions over the past few months, really since back in October 2022. And so in less than a year and a half here, we have seen a massive expansion in the overall market cap for NVIDIA. NVIDIA right now is a $2.2 trillion company. Now, if NVIDIA starts to stall here, as it has for the past couple of days, we've got some really concerning things to consider here when it comes to market prices and valuations. Because if NVIDIA, which is the leader on the AI trend here, it is the leading GPU manufacturer, starting to cool down, it starts to correct, say, 10 or 20% from here, that is going to have massive ramifications for all equities. The reason it is important to track market leaders like NVIDIA, which have not only obviously become large companies for that matter, but also been the biggest performers, is that when your best performers start to wane, it usually drags down all the other performers as well. And I'll give a great example here, right? We've got other companies that are equitably larger than NVIDIA that are already showing signs of stalling. Apple's already down from around $199 a share down to $169. If we take a look here at the longer term chart, we've talked about how Apple could have a significant PE multiple contraction coming down to this lower range band here if it doesn't hold on prior resistance. Outside of this wall, you've got Microsoft, right? Microsoft has been one of the few plays here that's held up okay, right? It's been able to still hover here again right here on March 21st. I think a big reason why equity markets haven't set in a new high is because Microsoft is still hovering around this range here since back then. But generally speaking, like if we're being honest, the real expansion in Microsoft's price has kind of stalled, right? We've been, generally speaking, not making much expansion in our moves since back at the beginning of 2024, right? So generally speaking, we've been on a really nice uptrend here. We've seen Microsoft more than almost double off of these lows here, getting very close to a doubling from those lows back in November 2022. And the question is whether or not at a current market valuation of $3.16 trillion, the most valuable company in the world, can Microsoft really continue expanding from here? Like, these are fundamental, decent questions to ask, and maybe they can continue expanding, but is it fair to say that we could have a correction at this point? Yeah, I think it's quite fair to say that. It's quite fair when you see the market starting to reprice in and realize that they got way ahead of the curve on interest rate cut expectations. We've seen the US 10-year yield go from 3.8% back in December 2023, and in less than 4 months come back up to 4.4%, the same range we were at back in September 2023 or back in November 2023. This is essentially showing a huge reversal in expectations in regards to where the Fed is really going to be taking the federal funds rate over the next couple of months. We see oil starting to reemerge as well to its highest level since back in October 2023 and looking like it's going to continue expanding here, potentially up towards those prior highs on the prior summer back in September, or potentially even going up to this 3-digit figure of $100 a barrel with stubborn support at that 200-week as well as the 100-month EMA. Not a good sign here in the fight against inflation. So we're seeing a reignition of inflation, a reignition of expectations and higher interest rates for the Fed to curb that inflation. And you are starting to see a lot of signs here that something's about to break. You're seeing gold breaking from around $2,000 or $2,100, its key resistance since back in 2020, all the way up to $2,300. We're seeing the dollar index holding relatively stubborn here as well. Not a good sign for Bitcoin, as we tend to see an inverse correlation between the dollar and Bitcoin, as the dollar here in this case is gaining and maintaining. Well, I mixed two words there, gaining and maintaining. Gaining and maintaining strong support against broader currencies in the world. This is not playing well into the quote-unquote BRICS narrative and de-dollarization that a lot of people had preached that was fueling strength for Bitcoin. So I'm just trying to point these things in your direction, not to say or to fearmonger that Bitcoin can't continue expanding from here. Right? If the ETF inflows keep going, maybe Bitcoin starts to move alongside gold as this alternative hedging asset, even in a risk-off environment when it comes to equities or real estate and other risk-on assets. But we got to see whether or not that's really going to play out. And it's much more likely, historically speaking, that if equities are correcting, I'm just going to tell you guys flat out, if equities are going through extensive 10, 15, 20, 25% corrections or greater, Bitcoin is likely not going to fare well in that environment. We have seen an incredibly strong correlation between the performance of equities and cryptocurrencies over the long run. And I'll say this outright, it is no coincidence that we saw Bitcoin generally starting to formulate its bottom in November of 2022 during a period of time where equities were also forming their bottom before the expansion throughout 2023 and so far in 2024. Just keep that in mind here when you're making your decision process for your investment thesis and where you think things are going. If you start to see equity markets continue to show signs of weakness, we got to be prepared for that. So that's it for today's video, everyone. Thank you all so much for listening. If you enjoyed this video, consider dropping a like. It's a great way to support the channel, and I'll see you guys in the next video. Take care, everyone.